Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, December the 21st. The year's 2021. Let's talk trading. Keeping it simple. Distractions. These videos are for educational purposes only. Your results may differ from mine. Now, when I say distractions, you might think of, well, things that are, say, in your environment that might distract you. For example, you might have some other tabs open on one of your screens. So while you're trading, you're also looking at cat videos or something. Or you might have a messy desk and there's stuff. Or you might have kids or other people, yelling and screaming. So you've basically squirreled yourself away. You've got a quiet environment, not only from a audio, but also from a visual perspective. So you've got nothing out there that's trying to catch your eye. But that's not really the distractions I'm talking about. I'm talking about the distractions that are behind your eyes and between your ears. In other words, what's in your head? What's your brain? What's your mind doing that is distracting you? And one of the biggest distractions, I would say, are believing in things that aren't true, kind of like that Stevie Wonder song, Superstitious. Um, there's some things we know, some things we think we know, and even if we know something, if it's outside of our control, there's nothing we can do about it. So that's pretty much a distraction, at least to me. For example, we hear stories about the big boys running stops and fixing prices, blah, blah, blah. There's nothing we can do about it. So why do we concern ourselves with it? I think it's a story we like to tell ourselves to console ourselves when we take a loss or we fail to take profit or something, that they're out to get us. Those are just nothing more than just distracting thoughts, and they can really mess with your trading. Because if you think of trading almost like a game or like a sport, you really have to have your mental game going for you. Because if you don't, the rest of the stuff, you're isn't going to work. Because the first time you meet adversity and you crumble, that could be it for the day, week, month, year. So it's one of those things you're going to have to do a little mental inventory, because I have no idea what you're thinking, what your beliefs are when it comes to trading. And you're going to have to figure out what beliefs you have or holding on to or buying into that are distracting you from your trading. So remember that you need to have your risk management in place on each and every trade, so you don't lose any more than you're willing to lose in any one particular trade. I got some more feedback from traders, and some traders say that they like to see my indicators on different platforms. Well, okay. When I set out, I think it was around 2000, 2001, to start to do online trading, I had no plans on writing a bunch of writing a bunch of code for trading. Just wasn't, I wasn't doing it, even though, my degree's in computer science. But what happened was I started out, I believe it was on, trying to remember who was before TD Ameritrade. I started out with that broker. And then from there, somebody says, oh, you should use Quote Tracker. So I started using Quote Tracker. Then he says, oh, you need to use eSignal. I started using eSignal. And then I got into Stock Fetcher, because this is back when I was trading stocks. And so I started writing some code over on StockFetcher to do scans, looking for the best stocks to trade. And then I wound up on TradeStation. And that's what really started the whole indicator thing, because there was a lot of code out there. And, the source code was available, the ELD files. And when I looked at it, to me, it was just so much junk. And some of these people were charging, a lot of money for things that were really simple. So I said, I got to start coding. And, then I got kicked off of TradeStation. And I got kicked off of eSignal because I was coding a bunch of stuff on there too. And I wound up on MT4. And, I met with some resistance because some people don't like sharing the spotlight. And a buddy of mine said, hey, you know what? You shouldn't be giving your code away. You should at least make them buy you a steak dinner. And I've told this story before on videos. That's how the whole donational indicator thing is. So that's kind of the background. I'm not in this to write indicators on different platforms. There was a buddy of mine who does have a company to do that, and he wanted me to kind of partner up with him, but I didn't like his terms and conditions, so that never happened. So that's why, I was told I could do this on TradingView. I could do it on, what was that other one? Lightyear or something. I forget what the other one is, but yeah, there's a lot of platforms. But then I'd be spending most of my time coding and trying to support the code when people have questions, and just not interested in doing that. So I hope that answers that question. And then somebody else said that a lot of these methods are geared to day traders, but a lot of people are swing traders. And I think I showed you yesterday how you can use the concept of holo, highest open, lowest open, on a you know on a daily chart. You look for the highest and lowest monthly open, and that usually proves to be profitable. And then somebody else was interested in, I had made mention about the indicator. It's a TRO 2018 spread dots indicator. And what that does is, if you hit F9, it will show what I call buying and selling. So what happened here? You see here, the ask price dipped below the peak of the bid. And so you've got selling. And until the bid crosses above the valley, that lowest mark of the ask, you've got selling. So for it to turn into buying, wherever this lowest mark is, price has to go above it. And that's illustrated right here. Let's switch over to M1. And when I switch, all this is going to go away because it's dynamic. It's geared because the ticks aren't in memory, aren't in the history file. All you have are the closing prices. So I don't have access to those ticks. So right here, we've got the bid and the ask. We've got the peak and the valley. So here's the valley, here's the peak. So let's see, do we get buying or selling? And so far, it looks like we still have selling going on. Now we have buying. Why? Because the bid crossed above the lowest ask price. And so we've got 1.3 pip movement since then. And you can see the spread now 1.7. And you can see here price just dropped below. So now we've got selling. And one thing about this indicator, if I go in there, you can tell it how many levels of buying and selling you want to see from the history. So it puts the most recent up at the top. And I just found this indicator to use it to figure out the timing of trades. So right now, I know price has to get above the 32.46.6 for the buying to commence, and it just did. And you notice how sometimes these prices really jump. Once again, hitting the F9 key, you can see how these prices just really jump at you sometimes. And as you can see, price dropped back below. So you can use this if you're just, looking to make a pip or so. And you can see right now we're definitely ranging, so nothing's really happening. It needs to break out either this level or this level to get some real movement. But this is just the way that I came up with to define whether or not there's buying or selling going on and to help with timing of the trades. So if you notice, if you look at the spread and you look at these moves, you can see how hard it is sometimes to make a pip, especially when you've got this type of ranging going on. So price really isn't moving that much at the moment. And I wonder if there's a reason why. Are we near something? Oh, we're near the previous day's high here at 44. So that's probably one of the reasons. They're trying to decide, do we want to push price back up or do we want to bring it back down? So you see you got 4 pips. We pushed that 3 ball and we made a new low. So this 3 ball got pushed over here. That's now a 1 ball. And so you got 4.4 pips. So price was ranging here. Then all of a sudden you had a nice little move. Now all just like that, it's come back the other way. So fellow traders, just remember, distractions aren't always external. You might have some internal distractions that are causing you to not perform at your best when you're trading. So always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.